Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, friends. I'm Epstein, and here we are going into the weekend. And this is December 2nd, 2011, about 3:30 in the afternoon. And hooray for the stock market. It got a good move. I was a bit concerned with the rally back up today, to be honest with you, in the bonds and the notes. I don't know why that market's rallying back up. I would have thought the market would have, if anything, been under more selling pressure. U.S. figures are phenomenal. Unemployment down to 8.6%. If you looked earlier at production, if you look at consumer confidence, we're pretty upbeat in America right now. That doesn't mean things are getting markedly great, but they are not getting markedly worse, that's for certain. And they're not even stable. They're slightly on the uptick, and I've been mentioning that for a while. This can all come to a grinding halt if Europe does the wrong thing. And so far, Europe hasn't, at least in the past week. We've seen the central banks get together, and they're making swaps easier between them. That doesn't do anything for European debt. It loosened up money. Now it comes time for the debt, and I am betting, one way or the other, that it ends up with the printing of money, the issuing of bonds, the ECB buying whatever they have to buy, working with the IMF to fund money, and you're going to see stimulus packages come out. You're not going to see stimulus in terms of more employment in Europe. You're going to see they have to cut. They have to get used in a bunch of these countries that have people that are expecting the old way of life to see a new change. And that's a painful thing, but it's what's expected if they're going to get beyond this problem. And I think they will. I could be wrong. Maybe it all blows up in my face. Maybe politicians there do what Americans have become famous for, doing all the wrong things recently. And we are at home, in my opinion. But maybe they're going to get it right, and if they do, it gives us, whatever we're going to do, a chance to get it right again. Today I was surprised to see the dollar up. I have to admit I was a dollar bear coming into today. Technical work was bearish, and at the close of the day, the technical work flip-flopped. Happens. In the gold market, I'm bullish. If you read Kitco News, a lot of you go on these websites and read, you'll see I wrote an article that's bullish about gold. I wrote it for you and sent it out to everybody we had the name of already. And the silver and gold are doing pretty much what I wanted them to. Now, let me explain what I mean by that. I don't want to see these markets run anymore. I want to see them consolidate at least a little bit as we get closer to the end of next week. Back and forth action is what I'd like to see, and you're getting it. You had that one flare-up on November 30th, down a little yesterday, up a little bit today, and as you can see, the pattern is certainly one of higher highs and higher lows. First thing you look at to get an idea what the market's doing, what would kill the pattern? Getting under 1704.30, the most recent low. Where's the market fighting its battle? I want you to look at this 18-day average of closes, and this is what I've been saying. I would like to see the market actually take out today's lows on Monday, Sunday night, Monday, and then whenever it's ready to take out today's high again, if that happened, I think that might be a signal that starts becoming more important. Now, how far down would that drop go? That's the question that I don't know, and it's something I'm hoping for. As long as it doesn't get under 1704.30, I really don't care. The lower it goes, the better chance the market can work off getting it somewhat overbought. Right now you have the 18-day average, the 145-day average under the market, which means the average prices of closes are now under rather than over the market. And as you can see, for half the month of November, that's where you were. November wasn't a good trading month. It was nothing. The market, if you took a look at the ending price of October to the ending price of November, for the whole month you had about a $20 gain. So, and it all came, by the way, on the last day of November. Otherwise, you would have been pretty close to unchanged on the month. The Bollinger Bands, you've hit the top in November, you hit the bottom of the band, and now you're stuck in about mid-center, which makes all the sense in the world as the market's trying to figure out what am I going to do next, and it's not overbought. So if you're not overbought and you can slip down again and then start coming up and continue this pattern, well, I'm going to start making arguments towards the 1800 level. What would derail it? Anything that Europe does that isn't taken as the market by good, and the word is by good, come December 9th or that weekend. That's going to be real problematic. Is our Fed going to do a stimulus coming up at their next meetings? I don't know that they have to. You know, the numbers are looking better. I was the first person, or one of the first, that thought that they would as a Christmas gift. Now I don't see the reason. I'm looking at everything that's going on, employment number falling. We've got good holiday hiring. You know, but besides this step up, you're going to get a step down when everybody, for the Christmas season, come January, end of January, February, you're going to let go of the temps and so on. Things will take a slight turn down, but then we'll be looking forward to spring. We still have to get by Europe, and that's going to be the key. Here's the silver market. Look at that 18-day average, how you're fighting at it 3 days in a row. That's very much what I've been expecting. Here, too, I wouldn't mind seeing the market dip and then reverse back up, and that could be the all-go signal in this market. Platinum, not doing anything. It's still staying completely under the 18-day average. It's still oversold as can be, and it has not met my upside target yet of hitting the 18-day average at 1590.70. So I don't see anything there. In the S&P market, you can see a flat day. In fact, if you take a look after the rally of November 30th and you look at the closes, we've gone nowhere, and that's a hurrah for the market. Why? Because it held on to a huge weekly gain, something it hasn't done. We're so used to, and I was talking to one of my good friends today. He calls me up. He says, yeah, it was up 400 points. It'll be down that by the end of the week. And it wasn't. So at least something's a little bit different. We all have that to cheer about. Before I go on, you know, it is the holiday season. It's time of giving, and I like to work on technical products. This is our website, www.iraepstein.com. There's two things I've done. I've issued my new charting course, and ads about that will start coming out to you on Monday. This, though, if you look up at the top, it says the Ira Epstein Market Center, as you can see with that arrow, and there's an area that says log in. I don't want you to touch that yet, but where it says register, I want you to click it just like this. When you click it, this page is going to come up. I want you to look at this area, free 30-day trial. Free. I don't want any money from you at this point. I don't want you to do anything like that. I want to give you two products. I've been bragging and telling you about our handheld that works on any smartphone device. We've got it working, and I can tell you the raves are unbelievable. I'm now going to be passing it out this week to all my clients. I mean, they'll all be getting, I'm setting up all the systems to get them set up. It doesn't yet place orders. That could be in next week or the week after. I mean, we've already tested it. We're just doing more testing on it. You don't need it for order entry just yet. It's going to give you quotes. It's going to give you news. It's going to give you weather maps. You watching me in this? Well, when it comes out, I'll be able to send a message that it's out. You just click on, and boom, you're watching it on your smartphone if you want to watch this. If I put out my market research, and when I do, eventually this month, it's going to be able to put that out, and it's going to be right there on the phone for people. Neat stuff that we're doing. We've also built another part of our software, the type that you've seen behind me, that's web-based instead of Java-based. It's not as complex as the software we have here. The one I've got, I think, is top in the industry. It does things that, to explain it all to people, really, it takes a long time. The web-based is light. It's not like something you've seen. It has fixed format pages, custom quote pages, and you can work your mobile device by setting up any pages you want on that if you want. From there, it'll work your mobile device. So everything you can see me doing there, it does, and it does a lot more than that. What do you have to lose? It's free. It's Christmas time, so let me give you something. Just go to our website, www.iraepstein.com. Go up to the top of the page, hit the word register. You've got a gift from me. Copper market. We've gone up to the top of the Bollinger Band in the 360s. Now, I know people want to get super bullish here, but this is the area where I see it, at least, that I think money's going to come off the table. If I'm wrong, you've got to take the Bollinger Band and widen it out like it widened out back there. And this widening, it's because prices fell. You'd have to start it and get prices going up again. You don't have an embedded stochastic, you're overbought. I'd be very cautious. As bullish as I am that Europe's going to do the right thing, you've got to play with some caution here. The sugar market, backing off now, not quite ready to do what I was hoping, getting up to the 24.14 level. It's not a buy. The market is under the 18-day average, but I do think you're in the thralls of bottoming out in those markets. So take advantage this weekend. Enjoy yourself. Enjoy the charting software. It doesn't even need instructions. It's so simple that it just will start working for you. If you need help, we have a whole help desk to help you out anyways. With that, I'm Ira Epstein. Happy holidays.